Today we will study about an important topic of accounting, that is accounting equation. When we were studying about the accounting principles, there was a principle known as the dual aspect concept, which implies that in accounts every transaction is having at least two aspects. If something is coming in the business, then something of equal value should go out of the business. This is the basis of the double entry system in accounts. In maintaining our financial statements, the businessman follows the double entry system of accounting, and the dual aspect is the basis of double entry system. So, to check whether the rules of double accounting system is followed or not, we prepare an accounting equation. As you know, an equation is a mathematical expression which shows a relation between the left hand side and right hand side, as you have studied in maths. So the idea of accounting equation is derived from the dual aspect concept of accounting. This concept explains that at a point of time, the total assets of a business are always equal to the total of liabilities and capital. This relation, when expressed in the form of equation, is called accounting equation. So the basic accounting equation is assets minus liabilities is equal to capital, or it can be written as assets is equal to liabilities plus capital. Capital, or it is also known as owner's equity. So in every transaction, this equation should be fulfilled. Left hand side should always be equal to the right hand side. If it is so, this ensures that the rules of double entry system are being followed. In practical life, when the accountants maintain their accounts, they do not prepare accounting equation because they are very well versed with the system of accounting. So they start their accounting with the preparation of journal. But as a student of accounts, we have to first learn to prepare accounting equation so that we are clear about the dual aspect concept. For preparation of accounting equation, we will be using this equation: assets minus liabilities is equal to capital. Assets minus liabilities is equal to capital. Assets, you know, are the properties of the business की संपत्तियाँ, with the help of which the business is done, like cash in hand, cash at bank, goods, then debtors, building machinery. Liabilities are the debts of the business, udhar, like creditors, loan, and capital is the business cash or goods or any other thing invested in the business by the owner is known as capital. It is also a liability for the business, but it is known as owner's equity or capital. Now, how does this equation works? We will take example and few transactions, and we will try to solve the equation. Suppose a transaction is there. Started business with cash rupees 10,000. A businessman has started business with cash of rupees 10,000. Now, as you know, according to the dual aspect concept, every transaction has at least two aspects. So there must be two aspects in this transaction also. What are these two transactions? Number one, what is being invested? Cash. What is coming in business is cash. So one aspect is cash here, and when the cash is invested in business, it is known as capital. So the other aspect is capital. So these two aspects are there in this transaction: cash and capital. Cash is an asset, capital is liability. How will we put this in this equation? First transaction. In this transaction, cash is invested in business, cash is coming in the business, so there is increase in an asset called cash of rupees 10,000. There is no liability in this transaction, but because cash is invested in business, there is increase of 10,000 in the form of capital. Now, for fulfillment of dual aspect, this equation should be equal. Left hand side should be equal to the right hand side. We can see left hand side total is 10,000 minus nil is equal to 10,000. That means in this transaction what we have done is okay, because left hand side is equal to the right hand side. We take another example, number 2. Suppose transaction is purchased goods for cash rupees 2,000. The businessman has purchased goods for cash 20,000. Again, there must be two aspects here. When goods are being purchased by the businessman, goods are coming in the business. So one aspect is goods, and something must be going out. Cash is going out. So two aspects involved here are goods and cash. Cash is asset. Goods is also an asset. How will we show it in the equation? Now, second transaction. When we are preparing the second transaction, we should not forget what is there in the first transaction, previous transaction. In first transaction we had cash of 10,000, but since we have purchased goods for rupees 2,000, in the second transaction we have purchased goods worth rupees 2,000. So cash is going out of the business. So out of this 10,000 in the second transaction, remaining cash will be 8,000. Then we have purchased goods. So a new asset is coming in the business in the form of goods for rupees 2,000. There is no liability involved in this business, and sale and purchase of goods has no effect on the capital. So capital remains as it is, 10,000. Now can total it. Now our assets is cash. There we have two assets, cash and goods. So total assets are coming to 10,000. There are no liability and there is no change in the capital. So new equation is coming to 10,000 minus nil is equal to 10,000. Again, left hand side is equal to right hand side. That means we have followed the double aspect principle. Now number 3, sold goods for cash. Rupees 500. This time the businessman has sold goods for cash rupees 500. The two things involved in this: one is cash, which is coming in the business. When we are selling goods, cash will come in, and because we are selling, goods are going out. The two aspects involved are cash and goods. Both are assets. So its effect on the equation. The second transaction, we had cash of rupees 8,000. Now since we have sold goods, cash is coming in the business. Now cash, we will have a increase in cash will increase to 8,500 rupees, and goods which were of rupees 2,000, since these goods are sold, now goods will remaining goods will be only of rupees 1,500 rupees. 2,000 minus 500, and cash, because we have sold goods for cash, cash is coming in, cash will be 8,000 plus 500, 8,500. There is no liability involved here, and sale and purchase of goods does not affect the capital, so capital will remain as it is, 10,000. So you can total it and check it. Total assets are 8,500 plus 1,500, 10,000. There is no change in the liability and no change in the capital. So 10,000 minus nil is equal to 10,000. We can take another example. The businessman paid salary of rupees 1,000. The businessman has paid a salary of rupees 1,000. Now, the two aspects. First, the salary is paid in the form of cash. So one aspect is cash, and if when the businessman is paying salary, that means cash will be reduced. And the other aspect is, because the businessman is paying salary is an expense for the business or businessman. So when there is an expense or loss, it directly affects the capital. When there is an expense or loss, capital is reduced. When there is income or gain or profit, capital increases. So in this case, because salary is being paid in cash, now the cash which was 8,500 is reduced by 1,000, because we have paid salary in the form of cash. Now we have cash of rupees 7,500. Remaining cash is 7,500. There is no change in the goods, because this transaction does not affect the goods. So goods will continue as it is, 1,500. There are no liabilities in this transaction, but the capital will be reduced by 1,000 because we have paid an expense. So total of assets 9,000, no liabilities, and total of capital 9,000. So 9,000 minus nil is equal to 9,000. Left hand side is equal to right hand side. That means we are following the dual aspect concept. Number 5. Received interest. Received interest rupees 500. Now the businessman has received interest from somewhere of rupees 500. This interest has been received in the form of cash. This interest has been received in the form of cash. So cash is one aspect is cash, and again this is interest that has been received by the businessman is his income. So in case of income, its effect is on capital. When there is an income, capital increases. So first aspect, cash is increased by 500. So previously we had a cash of rupees 7,500. Since we have received interest in the form of cash, now we will have cash of rupees 8,000. There is no change in the goods. Goods will remain as 1500. There is no change in liabilities because there is no liability in this transaction, and there is an income of 500 rupees in the form of interest. So due to income, the capital will increase by 500, not total. Assets total is coming to 9500, liabilities are nil, and capital is 9500 rupees. Again, left hand side is equal to right hand side. Number 6. Purchased goods on credit from Mohan, rupees 2000. In this transaction, the businessman has purchased goods from Mohan, but these goods have been purchased on credit. Now, two aspects involved here. First thing is goods. Goods have been purchased, so goods are coming inside the business. Second, we have not purchased it for cash. That means cash is not going out. Instead, because we have purchased goods on credit basis, Mohan has become our creditor. Second aspect will be our creditor Mohan. We have to pay to Mohan, we owe to Mohan. That is why Mohan is our creditor. Creditor is a liability. So, in accounting equation, we had a cash of rupees 8000. In this transaction, there is no cash involved, so cash will continue as it is. Cash rupees 8000. Goods we had rupees 1500 previously. Now again we have purchased goods worth rupees 2000. So goods will increase to 3500. There is a liability known as creditor. The name of the creditor is Mohan. You can mention here. There is a liability called creditor, rupees 2000, and there is no change in the liability because there is no income or expense. So total of assets is coming to 11,500. Total of liability is 2000, and total capital is 9,500. So 11,000 minus 500 minus 2,000 is equal to 9,500. Left hand side is equal to right hand side. So fulfillment of this equation proves that we are following the dual aspect concept, which is the basis of double entry system and basis of accounting and basis of the preparation of financial statements in the form of journal, ledger, trial balance and final accounts. We will continue with the accounting equation in the next class.